Good morning, dear students. Today we are going to start chapter on concept of income tax 1961. Why do we have the need for income tax in our country? I may tell you that our nation requires funds, and the funds are required for the purpose of development of our nation. They may be required for the purpose of providing infrastructure facility in India, for preserving the natural resources, for defense purposes, or for other meeting contingencies as may be required from time to time. So these are the basic needs for which we require the funds. Now the question comes, how to finance these requirements? So one of the sources for financing all the aforesaid needs is through tax revenues. The taxes can be of two types. Number one, the direct taxes. Number two, the indirect taxes. The direct taxes means they are levied by government on the income and wealth received by the households and businessmen. And indirect taxes are those taxes which are levied by the government on goods and services which are passed on to ultimate consumers. So these are the two basic tax structure which we have formulated for financing all our needs. If you just happen to see the Constitution of India has also given powers to the central government to levy and collect income tax apart from the tax on agriculture income. And in 1961, the Parliament passed an act which was called the Income Tax Act 1961. So ultimately, the Income Tax Act 1961 was passed to finance our financial needs. It means as far as direct tax is concerned, the Income Tax Act 1961 takes care of it. Now, in order to understand the tax law in India, we are required to at least understand the four things. Number one, the Income Tax Act 1961. Number two, the Income Tax Rules 1962. And apart from these two things, circulars, clarifications which are issued by the Central Board of Direct Taxes, we may also call it as CBDT. And the fourth is judicial decisions. It means these are the four pillars which are required to be understood so that we can understand the income tax law. First, I'll just come. The first pillar is your Income Tax Act 1961. The imposition or the levy of income tax is regulated by the various provisions of Income Tax Act 1961, and the said act has been implemented from 1st April 1962. However, the act was passed in 1961, but its implementation took place, or it came into effect from 1st April 1962. And the Income Tax Act, it contains 268 sections and it has got 14 schedules. Apart from the Income Tax Act, the second thing which is required to be understood by us is the budget, is the finance bill. You might have heard the finance bill, because every year the finance minister of our country, he presents the budget before the parliament. And one of the important components of this budget is the finance bill. The finance bill declares the financial proposals of the central government for the next financial year. It also says to contain various amendments which the government seeks to make in the area of direct and indirect taxes. If you happen to see this finance bill, you will find that the bill contains various rates of income tax and other taxes which are given in the first schedule which is attached to such finance bill. For example, the finance bill of 2007 will give you the rates of income tax as well as some other rates also. So the first schedule to such finance bill gives the rate of income tax in 4 parts. So I may say that the total rate of income tax, they are just explained or enumerated in 4 parts called Part A, Part 1, Part 2, Part 3 and Part 4. So the Part 1, I'll just give you first the explanation what exactly is covered in Part 1. The Part 1 of the finance bill gives the rates of tax for various assesses for the current assessment year. For example, the the Finance Bill of 2007 shall give the rates of taxes for the assessment year 2007-2008. Similarly, the Finance Bill for the next year, say 2008, shall give the rates of tax for the assessment year 2008-2009. So this is the first part. The second part of this bill gives the rate of deduction of tax at source, means TDS, from the income which is earned during the current financial year. It means when I say that the Finance Bill 2007 is there, it means it will give me the TDS rates in respect of the income which is earned during the current assessment year 2007 to 2008. Similarly, Part 3 gives the rate of computation of advance tax for the current assessment year, and the Part 4 gives the rules for computation of net agriculture income. So the Finance Bill overall gives you the whole tax structure or various provisions of the tax for the assessment year in the Finance Bill. Now the third important source of law, when I say the source of law, means we have already discussed that there are 4 important sources of law which are required to be understood by us so that we can have the fair knowledge of income tax law. So the third important sources of law is income tax rules. Please remember that the administration of direct taxes is regulated by the CBDT, or I can say by the Central Board of Direct Taxes. Section 295 of the Income Tax Act 1961, it gives the power to the board means to the Central Board of Direct Taxes to make rules, and for proper administration of the Income Tax Act, the CBDT frames rules from time to time, and these rules are collectively known as income tax rules. So I just want to repeat it again. I just want to give emphasis on that because this is a very, very important thing to remember in income tax, particularly when you happen to understand the Income Tax Act, because income tax rules play a very, very important role. I just repeat it again that the administration of direct taxes is regulated by the Central Board of Direct Taxes, number 1, and number 2, Section 295 of the Income Tax Act 1961 gives the powers to the Central Board of Direct Taxes to make the rules, and for administration of the Income Tax Act, the CBDT frames the rules of income tax from time to time, and these rules are collectively known as Income Tax Rules 1962. Now the next thing is, the next item from the source of income tax law is circulars and notifications. From time to time, these circulars are issued by the CBDT to deal with certain specific problems. The CBDT may issue the circulars or notification for clarifying certain doubts regarding the scope and meaning of the provisions, and these circulars are issued for the guidance of the officers and or the assessors. But in respect of these circulars and notifications which are issued by the CBDT, please remember that Income Tax Department is bound by the circulars, but assessees can challenge it in the courts of law if it is not in accordance with the law. The next important source of law is the case laws. It may kindly be appreciated that it is not possible by the Parliament to visualize or to perceive and provide for all issues that may arise in the implementation of any law or any act. Hence, in the case of question of law, the judiciary will hear the dispute between the assessees and the department and give decisions on various issues. The decisions given by the various high courts will apply in the respective states, and any decision which is given by the Supreme Court will become the law. Where there are contradictory ruling in respect of any decision, the decision of larger bank shall prevail. It means even if there is some contradictory decision in the Supreme Court, and if later on the decision is given by some larger bank, then the decision of larger bank shall prevail. So the decision given by the High Court, Income Tax Appellate Tribunal, they are binding on the assessee as well as income tax authorities which fall under their jurisdiction. Thank you very much.